EU proposes 19 sanctions package targeting Russian LNG and financial evasion. Pakistan and Denmark signed loan deal for Faisalabad wastewater plant. And the Bank of Japan holds rates at 0.5% amid internal dissent.
John Trump, do solemnly swear that I will faithfully take office of President of the United States.
Capital open, the emergence and reciprocity.
Mexico, Canada, Greenland.
Hello, good evening and welcome to the Economic Bulletin here on Q News. And we start off with President Donald Trump, who has just held a call with the Chinese President Xi Jinping today to finalize a framework agreement to transfer control of the social media app TikTok to US-based ownership. The deal, which aims to avert a US ban on the app, was confirmed by US Treasury Secretary Scott Bessent following negotiations in Madrid. According to officials, the agreement would see TikTok's American operations sold to a consortium of U.S. investors, including Oracle and Andreessen Horowitz and Silver Lake Management. The ownership stake of TikTok's Chinese parent company, ByteDance, would be reduced to below 20% to comply with the 2024 U.S. national security law. WTO Director General Ngozi Okonjo-Iweala has described US-China dialogue as very encouraging and urged greater multilateral cooperation to address global trade challenges. Speaking at the WTO Public Forum in Geneva, she emphasized the importance of sustained engagement between the two economic powers for global stability. Okonjo-Iweala also called on major economies to support African trade development, noting that the continent accounts for less than 3% of global trade. China's zero tariff initiative for African countries she welcomed the China initiative and stressed the continued importance of global institutions in solving shared challenges. Kenya's Trade Minister Lee Kinyanjui has stated that Kenya expects to finalize a bilateral trade agreement with the United States by the end of the year. The deal would be the first of its kind between the United States and a sub-Saharan African nation and aims to protect Kenyan exports if the Africa Growth and Opportunity Act is not renewed. The act, which grants duty-free access for eligible African countries, expires at the end of September. Kenya exported $737 million in goods to the United States last year and supports 300,000 jobs in its textile sector through the program. Kinyanjui warned that without a transition, the expiration could cause significant disruption. European Union finance ministers gathered in Copenhagen for an informal meeting focused in part on how to use frozen Russian assets to support Ukraine, amid concerns over future US backing under the Trump administration. German Finance Minister Lars Klingbeil emphasized the need for productive ideas on leveraging the immobilized funds, while noting Berlin's long-standing legal reservations about outright seizure. The EU has been exploring ways to maximize the use of these assets to fund Ukraine without crossing legal red lines. The two-day meeting comes as European leaders seek to ensure continued financial and military support for Kyiv. Discussions are expected to continue on Saturday as ministers work toward a unified stance.
€0.5 billion.
European Union finance ministers agreed to a roadmap for the launch of a digital euro, advancing plans for a public digital currency aimed at reducing the bloc's reliance on US-based payment systems like Visa and MasterCard. The agreement gives member states a say in whether the currency is issued and how much each resident can hold, key safeguards against potential bank runs. The digital euro aims to reduce Europe's reliance on foreign payment systems and strengthen financial sovereignty. The project still requires approval from the European Parliament and Council, with a potential launch expected within 3 years if adopted. European Commission President Ursula von der Leyen has announced the proposal of a 19th package of sanctions against Russia, targeting the country's energy revenue and financial loopholes used to evade existing restrictions. The new measures include a full ban on imports of Russian liquefied natural gas into European markets. The sanctions package also strengthens efforts to combat evasion. It imposes transaction bans on additional Russian banks and financial institutions in third countries, extends restrictions to cryptocurrency platforms, and targets foreign banks connected to Russian alternative payment systems.
Presenting the 19th package of sanctions. First, on energy. Russia's war economy is sustained by the revenues from fossil fuels. We want to cut these revenues. So we are banning imports of Russian LNG into European markets. It is time to turn off the tap. We are prepared for this. We have been saving energy. We have been diversifying supplies. We've been investing in low-carbon sources of energy like never before. And today, these efforts pay off. My second point. We're targeting the financial loopholes which Russia uses to evade sanctions. We're putting a transaction ban on additional banks in Russia and on banks in third countries. We're stepping up our crackdown on circumvention. As evasion tactics grow more and more sophisticated, our sanctions will adapt to stay ahead. Therefore, for the first time, our restrictive measures will hit crypto platforms and prohibit transactions in cryptocurrencies. We're listing foreign banks connected to Russian alternative payment service systems, and we are restricting transactions with entities in special economic zones.
Now, joining us to talk more about this is Rami El-Kayoubi, who is joining us from Moscow, who is a lecturer at the Higher School of Economics. Thank you very much for being here with us. So already the EU has drastically reduced its reliance on Russian pipeline gas. So how impactful do you reckon that this will be on Russian LNG imports?
I don't think that it will have any important impact because actually Russia during the last few years managed to diversify its energy exports, and now China and India and Turkey are the main exporters or rather importers of Russian energy resources. And at this point, well, there are still few European countries that buy Russian gas and oil, but they are no longer influential. So even if Russian energy supplies to Europe are totally halted, it will not be crucial for Russian economy.
And how effective do you think the restrictions on cryptocurrency platforms might be, given the adaptive nature of financial evasion tactics?
Well, actually, Europe is trying to stop Russia's war in Ukraine by imposing one package of sanctions after another. But if we read the history, we will explore that sanctions did not influence or even on small countries such as North Korea, Iran, Syria under Assad, or Libya under Gaddafi. So shall it influence such superpower is Russia? No, obviously not. So at this point, European sanctions have impact on Russian economy, but they are not crucial.
And this is the 19th package of restrictions and sanctions. Do you think we might ever get to a limit for President Putin?
Well, actually, 19th or 20th or 30th package of sanctions, as I mentioned, will have some impact on Russian economy, but it will not change Russian strategy in total. As actually Russia managed to find alternatives to partners such as China, India, Arab states, and at this point, European sanctions have no longer a crucial impact on Russian economy.
And are there financial loopholes when it comes to enforcing, the member states enforcing these measures?
Actually, it's difficult to evaluate these sanctions now, as everything will depend on how they will be applied. For example, the European Union imposed sanctions on Russian oil, but Russia managed to redirect its export to China and India developed few oil plants, and now actually few oil products go to Europe as if they were Indian, but in fact they are produced out of Russian oil. So really, this is a question that many questions will depend really on details.
Yeah, and what about these frozen Russian assets? Do you think the EU is going to do anything about the money they have in their banks put there by Russian oligarchs?
Well, actually, it's possible. Actually, the Western countries have already freezed Russian actives for more than $300 billion, and it didn't have impact. Now they might impose some sanctions on Russian oligarchs, as you mentioned, but actually this will have a negative influence on the image of Europe as a region which guarantees investments. But in case if the EU implies some sanctions against individuals, that will mean that there are no guarantees.
Yeah, I mean, Germany has expressed legal reservations. Do you think that the EU will come to some kind of agreement?
Well, what I mentioned was the European Union invents different sanctions and then itself invents different ways to get around them. As the last few years have proved that when you speak about such superpower as Russia, you cannot erase it from economic and geopolitical map. So, and as long as the European Union develops sanctions, Russia develops ways to get around them, such as the Grey Fleet, which is specialized in such oil, which is like Iranian, Venezuelan, Russian, which is under sanctions. Now there is an option of parallel import in Russia, so and all Western commodities such as iPhones are presented in Russia via parallel import without authorized agents. So these sanctions will not succeed anyway.
So do we think, like, whatever happens, when it comes to financial measures, when it comes to sanctions on Russia, Putin is not going to budge?
Well, as I mentioned, Putin now has very concrete goals in Ukraine, which is the first of which is to take Donetsk region under total control. So, and actually, Putin has military reserves. As yesterday, Putin mentioned that there are 700,000 Russian soldiers on the front line. So at this point, Russia is quite stable, and some new sanctions from the West will not have a crucial influence on Russia.
When it comes to the United States, of course, big players in this, where do you think Trump comes down on sanctions? He keeps threatening more financial sanctions on Russia, but then delays them and hasn't got around to doing it yet.
Well, actually, Trump's policy is different. Trump uses the policy of carrot and stick with Russia and Ukraine, and he feels that when Russia is not willing for peace process, he threatens Russia with sanctions. So when Ukraine is not interested in the dialogue, he puts pressure on Ukraine. So sometimes he deals with Russian-Ukrainian crisis as if it was a real estate deal in New York, but it's much more complicated.
Okay, well, thank you very much indeed for joining us. Rami Al-Kayubi there joining us from Moscow, who is a lecturer at the Higher School of Economics. Thank you very much indeed for being there with us. Now, back to our economic bulletin. And the US President Donald Trump has just announced that he and Chinese President Xi Jinping have made progress on several key issues during a recent phone call this afternoon, including a potential deal involving TikTok. According to Trump, the two leaders also agreed to meet in person at the APEC summit in South Korea, scheduled for next month. In a social media post, Trump indicated that the discussion covered trade, fentanyl, efforts to end the war between Russia and Ukraine, as we were just talking about, and the status of TikTok's operations. He described the call as very good and suggested that further discussions would continue in the near future. Trump also stated that he plans to visit China early next year, with Xi expected to make a reciprocal visit to the United States at a later date. Now back to Europe, where the official Office for National Statistics in the UK has reported that British retail sales rose a stronger than expected 0.5% in August. This rise was boosted by warm weather and increasing spending on clothing, food and department store goods. The figure exceeded the 0.3% growth forecast by economists. Despite the monthly gain, sales declined 0.1% over the 3 months to August, reflecting broader consumer caution. High inflation, particularly in food prices, and concerns over potential tax increases have weighed on household spending confidence. Also, official data has revealed the UK public sector borrowing reached £83.8 billion sterling between April and August. It exceeded the official forecast of £11.4 billion sterling and marked the highest 5-month deficit since the pandemic. The higher than expected borrowing, driven by increasing spending and on public services, benefits and debt interest, intensifies pressure on Chancellor Rachel Reeves ahead of her budget in November. Sterling fell 0.5% against the dollar following the release, reflecting market concerns over the nation's fiscal health. Pakistan and Denmark have signed an agreement for a concessional loan to construct a large wastewater treatment plant in Faisalabad. The project, with a daily capacity of 200,000 cubic meters, will improve sanitation and water management in the city. The loan, provided by Denmark's Danida Sustainable Infrastructure Finance, features highly favorable terms with 35% concessionality. This marks Denmark's first development intervention in Pakistan in years and reflects growing bilateral cooperation in green infrastructure. Danish engineering firms are expected to contribute expertise to the project. The State Taxation Administration has reported that China's manufacturing sector remained a key driver of economic growth in the first 8 months of this year, with tax revenue from the industry rising more than 5% year on year. Manufacturing accounted for 30% of the country's total income tax. during the period, underscoring its role as an economic ballast stone. The growth was especially strong in high-tech and advanced manufacturing segments. Local tax authorities have provided targeted support to help manufacturers upgrade and transform, reinforcing the sector's shift towards higher-end, smarter and greener development. Japan's central bank kept short-term interest rates at 0.5%, despite dissent from two board members who called for a rise of 0.75%, in a move markets saw as a prelude to a near-term increase in borrowing costs. The Bank of Japan's hawkish shift surprised markets and put investor focus back on how soon it will next raise interest rates, even as uncertainty over the global outlook and domestic politics grows. Bank of Japan Governor Kazuo Ueda said that in the central bank's view, the Japanese economy would continue to recover moderately, but warned that U.S. tariffs were weighing on manufacturers' profits. Malaysia's export growth eased to 1.9% year-on-year in August, as the boost from earlier front-loading ahead of U.S. tariffs faded. Imports fell 5.9%, their first decline in 5 months, causing total trade to drop 1.9%. The trade surplus, however, widened significantly to 16.1 billion Malaysian ringgit, supported by steady demand for electrical and electronic products, which rose 10.1%. This helped offset declines in petroleum exports, which fell 17.6%. Despite the August slowdown, Malaysia's overall trade performance remains resilient in the first 8 months of the year, with exports up 3.9% and imports growing 3.6% compared to the same period in 2024. A senior debt official has stated that Angola will decide by November whether to extend a $1 billion derivatives agreement with JP Morgan or raise funds on international markets. The current deal, backed by $1.9 billion in government bonds, expires at the end of the year. Dorivaldo Teixeira, Angola's public debt director, said the choice will depend on cost, noting the current arrangement is cheaper than the country's 10% Eurobond yield. The deal previously required a $200 million margin call after oil prices swings and lowered collateral value. Angola also faces an $860 million bond repayment in November. Officials are working to improve fiscal transparency and adopt more conservative oil price assumptions amid current revenue pressures. Canadian retail sales declined 0.8% in July, largely reversing the previous month's gains as consumer spending weakened across most sectors. The drop was in line with overall expectations, but sales excluding autos fell 1.2%, worse than forecast. While auto sales saw slight growth, 8 of 9 retail categories saw declines. The softer figures raise concerns about economic momentum after the second quarter contraction, though an early indicator suggests a potential 1% rebound in August. Tech now, and Microsoft announced plans to construct a second massive artificial intelligence data center in Wisconsin, bringing its total investment in the state to more than $7 billion. The new facility will join a previously announced $3.3 billion data center in Mount Pleasant, which remains on track to open next year. Together, the two complexes are expected to create around 800 permanent jobs. The expanded campus will eventually host one of the world's most powerful AI supercomputers. The project marks a significant turnaround for the Racine County, where Foxconn had previously scaled back a major large factory plan. Microsoft also emphasized its sustainable design, which includes energy-efficient cooling systems to minimize environmental impact. Meta CEO Mark Zuckerberg has unveiled the company's first consumer-ready smart glasses with a built-in display. The Ray-Ban display glasses include a small digital screen in the right lens for notifications and basic tasks. They will be priced at $799 and available in stores from September 30th. The device also comes with a wristband controller that translates hand gestures into commands such as answering calls or responding to messages. And Chinese AI firm DeepSeek revealed its R1 model was trained for just $294,000, far below US rivals' costs. Published in Nature, the estimate marks the company's first disclosure, showing R1 ran on 512 NVIDIA H800 chips. By contrast, OpenAI's Sam Altman has said training models cost over $100 million. The low figure highlights China's ability to advance AI despite US chip export curbs, with DeepSeek confirming it used some A100 processors in early tests before relying on H800s. A new report has shown that U.S. clean energy jobs grew 3 times faster than the national workforce last year, adding over 100,000 positions despite policy shifts under the Trump administration. The sector now employs more than 3.5 million Americans, outnumbering fossil fuel workers 3 to 1, with strong growth in states like Texas, Florida, and New Jersey. The report warns this growth is at risk due to rolled back federal support for renewables. Energy efficiency roles, such as installing HVAC systems, made up the largest share, employing nearly 2.4 million people. Oil prices dropped today as worries over fuel demand outweighed expectations that the year's first interest rate cut by the U.S. Federal Reserve would trigger more consumption. Brent crude futures were down 0.5% at $67.13 a barrel, while U.S. West Texas Intermediate futures lost 0.6% to $63.16. Both benchmarks were still on track for a second consecutive weekly gain. Gold prices moved higher today as well and headed for a 5th straight weekly gain, with market attention focused on further U.S. rate cuts, Qnews, after the Federal Reserve delivered its first rate cut of the year. Spot gold was up 0.3% at $3,653.86 per ounce. Prices are up 0.3% so far this week. U.S. gold futures for December delivery gained 0.2% to $3,686.60. And global stock futures were mixed in subdued pre-market trading on Monday, with muted moves across major U.S., European and Asian indexes. In the U.S., S&P 500 futures inched up 0.03%, and Nasdaq futures rose 0.16%, while the Dow Jones futures dipped 0.01%. In Europe, UK's FTSE 100 edged up 0.03%, and France's CAC 40 0.17%, while Germany's DAX declined 0.10%. In Asia, Japan's Nikkei 225 fell 0.57%, the Shanghai Composite dropped 0.30%, and Hong Kong's Hang Seng was flat. Now, just before we go, if you've just joined us, let's recap the main economic headlines today. EU proposes 19 sanctions package targeting Russian LNG and financial evasion. Pakistan and Denmark sign loan deal for Faisalabad wastewater plant. And the Bank of Japan holds rates at 0.5% amid internal dissent. And that's our economic bulletin for today. Join us on social media for more. At Qnews EGY is our handle. Thanks very much for watching.